Welcome back, traders. Today I'm going to teach you about the principles of support and resistance. Okay, first of all, these principles are very, very simple. This stuff is not complex at all. So please don't let it confuse you and don't let it overwhelm you, because this is just the basics of trading and understanding these markets. Okay, so what I'm going to do first is I'm going to teach you about support, and then we're going to go into resistance. And then we're going to go into a couple of different ways that you can trade based off of these principles. Okay, first of all, realize what support is. Support is simply a common level where traders decide to take their trades based off of. Okay, this level is generally going to be a common low, all right? For example, you see that the price approaches this level, which is 1.24253. Once here, it approaches it again. It approaches it here for the third time, and then for the fourth time here it approaches it, and we can even draw a line connecting these price points together. And what this forms for us is it forms a temporary level of support. It's not the strongest level of support, but it forms a level, okay? We see the price bounce off here, we see it bounce off here, we see it bounce off here, we see it bounce off here, and then we see the price head towards resistance, which is up here, and it comes back down towards support. As soon as the price hits this line, it reverses for just a couple minutes, but it reverses, okay? And then the price breaks through this line here, and it will create yet another level of support, or it will move towards another level of support. So realize that support is simply the common low of the market at that certain time. So realize that support is simply a common low that the price consistently touches, where traders start to draw their lines predicting that the price is going to reverse off of that level, okay? Traders are predicting that the price is going to come back down to this level and it's going to bounce, all right? Now, let's go forward so that I can show you some more levels of support and some of the behaviors of support, okay? Here's another level of support. You see the price come down and touch this level, okay? It bounces off resistance, which is right here. It bounces off support, okay, right here. And then it kind of bounces off support here too. Even though it breaks through this level, it still does hold this level of support, because as soon as price broke through it, it reversed back into this range. Support was held here twice, and then support was broken through again, and it was held once again here. So this is a strong level of support. When you see the price touch this level, it's very common that the price is going to bounce off of this key level, which is between the range of 1.2424 and about 1.2419, all right? So this is the area of the bounce. This is the area of support where the price will tend to reverse back the other way. So what we want to do is we want to look beyond support now into resistance. So I'm going to do that by removing all of the studies or all of the drawings that I have on my chart, okay? So now what we're going to do is we're going to look back for a common high that the price tends to touch consistently, okay? This is one of those levels. Here's another one right about here, okay? You see that the price touches this line here. It comes back up and it touches this level before reversing. Once it comes back up, it touches this level and it reverses again, okay? Then the price comes back into the range, it touches this level, it reverses, it comes up here, touches the level, reverses again, and then finally the price gained enough strength to break through this level of resistance, which is a common high that the price continually touches. And once it broke through this level of resistance, it moved on to another level of resistance, okay? So quickly, let's summarize that. You have support. Support is the bottom. Think of support as like the ceiling. If you see the price continually touch a certain price level, you can test to see if that level is a certain level of support. As you can see, although the price broke through this level here and bounced off of it, you can see that the price touched this point and it reversed, and then the price came down here and it touched this point, and then it did reverse temporarily before breaking through support, testing it, and then breaking through support once again. Now, realize this principle, okay? This is important. When there is a certain level of resistance or support, let's say resistance, for example, once the price breaks through that level of resistance, like it did here, it is said and it is taught by thousands of teachers that resistance now becomes support. So when the price breaks through resistance, resistance is going to become support. Okay, you can see the price break through resistance here, go into a new level of resistance, which is this level here. It tests it twice. Okay, it tests it 3 times. The price bounces off of the new resistance and it heads back down to support. Support is now expected to be this level. Okay, you see the price come back down to this level, it hits support, and then it bounces back. Okay, it hits support, it tests support again, it bounces back, it tests support for the 3rd time, and then once it tests support for the 3rd time, it bounces off of support once again. These are all levels where you can take a trade. Once you see the price hit a certain point 3 times, okay, you can start expecting that this is going to be a reversal level. You could have taken a trade here. As soon as it hits here, you could have taken a 5 to 10 minute trade. As soon as it hits here, you could have taken, like, let's say, you could have taken a 60-second, a 2-minute, a 5-minute, or a 10-minute trade. You could have taken a 60-second trade, a 2-minute trade, a 5-minute trade here. You could have taken a trade here. If you would have taken a trade here, you would have lost, yet you will still be in the money if you would have taken these 3 trades right back here, okay? Now, once you see the price hit a certain level more than once, you can start to test to see if that level is a level of support or resistance. As we see, the price hit this level twice, so we can draw our area of support and resistance between this area here, okay? It tests it here once, twice, it comes back and it tests support 3 times. We could have taken a 1 or 2 minute trade here. We could have taken a 1 or 2 minute trade here when the price broke through this level of support again. We could have taken one here as soon as the price was there. We could have taken one here, and we would have lost this one. We could have taken a put here, okay? That would have been 1 win, 2 wins, 3 wins, 4, 5 wins, and it looks like maybe 6 wins here, depending on when you got in, okay? And we would have had our 7th win before taking our first loss right here, all right? So this can be profitable if you're trading binary. I don't really expect for any of you to trade with this strategy if you're trying to trade Forex. It's just something that you have to know, okay? Okay, consider this knowledge like the fundamentals of what you absolutely should know if you want to predict the direction of the market ever, okay? And that's how you learn to become a great trader. As you see, the price breaks through support once again here, and then once it breaks through support, what happens? Support now becomes resistance. That's the next principle, okay? When you have a level of resistance and the price breaks through resistance, it's said that resistance now becomes support. Unless, of course, like in this example, where you have the price break through resistance and then reverse back and this level of resistance does not become support, okay? But you will find that anytime the price breaks through a level of support or resistance, that level can become the next level of support or resistance, okay? So what you'll find is if you have the price break through a level of resistance, this level can, but will not always become a new level of support, okay? This will become the ceiling where the price bounces off of. It doesn't do that in this example, but it does it a lot of the time, as it does back here with this example when we had the price break through resistance. Now, when the price breaks through support, it is said that support will now become resistance. So if the price were to retrace back like it did here after it broke through this level of support, this level will now become resistance. The market will bounce off of that level. So if you see the price come back up to this level, you can expect that the market may bounce off of this level. It's like a point of interest, okay? So realize support. Support is like the floor. It's a common low level where traders tend to place buy and sell orders, okay? This is where traders will normally place a buy order predicting that the price is going to bounce off of support. If you have an area like this, for example, when the price breaks through support, you'll have many traders placing sell orders. So this is an area where a lot of traders are going to be investing their money, okay? This is an area where a lot of traders are going to be buying when they see that the price comes down and it hits this level of support. And as you see here, once the price reaches this level of support again, you have a ton of traders who bought it, and then you have the continuing cycle of support becoming resistance and resistance becoming support, okay? So I hope this video helps. If you have any questions, feel free to ask it in the comments section below. In the next video, we're going to teach you how to understand how to draw trend lines so that you can start taking trades based off of the trends. Make sure to follow along. I'm Jamal Johnson from the Green Room Academy.